Hey YouTube, welcome back to another video. In this video, I want to do an in-depth business analysis of AMD. I'm going to talk specifically about the intrinsic value of AMD, and I'm going to figure out what that is by using a discounted cash flows model, this model right here. And then I'm going to talk about their business model, how the business makes money, the problems that they solve, just going over AMD's basic business so we can get a better understanding of what it is that we're investing in. And then I'm going to end the video off by reviewing their financial statements so we can see what their financial position is right now and how they're positioned in the market against their competitors, and for the future to see what their cash position is and everything like that. So usually how I start these videos off is I go straight to the annual report, and I usually talk about the business first and then their financial statements, and I figure out what the intrinsic value is last. But in this video, I'm just going to start off with the intrinsic value analysis because I know that's what a lot of people who are clicking on this video are probably looking for. So the first thing we need to figure out is the growth rate for years 1 through 5. I'm going to figure that out by going to Yahoo Finance and typing in AMD. Now, all I have to do is click on analysis, scroll down, and we can see the analyst's growth estimates for the next 5 years for AMD. It's 32.44%. And for years 6 through 10, I'm just going to be a little bit more conservative and say 10%. These are all just estimates, by the way. That's the one downside to using a discounted cash flows model, is that a lot of things are assumed. The growth rate is assumed, the return on investment is assumed, and the future cash flows are assumed. So it's not a comprehensive tool, but it is a tool that we can take into consideration when trying to figure out the intrinsic value of a business. The next thing that I'm going to want is the year 1 free cash flow. I can find this easily by just going to TradingView, typing in AMD, going to their financials, clicking on cash flows, and scrolling down. We can see that their 2020 free cash flow was $777 million. My intrinsic value calculator typically takes everything in billions, so just going to use millions right here. And net cash and net debt, I can figure that out by going to statistics, scrolling down. Total cash 3.79 billion. Then I'm going to subtract their debt, which is 657 million, so they really don't have much debt. Okay, so their net cash is 3.1 billion, stock ticker and shares outstanding is 1.21 billion. Okay, so after plugging in all of these values, we can see that this is what the cash flow would be for years 1 through 10, as well as what we would sell the business for in year 10. Because when we're doing an intrinsic value analysis, we want to try to analyze the business as if we were going to buy the entire business. So with a rate of return of 10% over the next couple of years, and if we were to sell the business in year 10, that would be 10 times free cash flow is what we would sell the business for. So right here we can see that this is 10 times free cash flow, 3.8 billion to 38 billion. So present value of free cash flow is $27 billion. Intrinsic value in billions, $30 billion. And then intrinsic value per share, we're just dividing the intrinsic value in billions by the shares outstanding. That gives us $25 per share, the 30% margin of safety of $17, 50% margin of safety of $12. So basically, according to the discounted cash flows model, compared to AMD's current share price, it would be considered way overvalued because AMD is currently trading at $109 per share, but our discounted cash flows model, based on AMD's current cash flows of $777 million, is basically saying that currently AMD is trading at a price that's way overvalued, and that the intrinsic value per share based on the current cash flows would be $25 per share. not $109 per share. And AMD is trading at 37 times earnings, so that is a little high, but it's pretty normal for growth stocks to be trading at a PE ratio of about 30 times. And then, of course, with a 30% margin of safety, that would be 17, and a 50% would be 12. So based on the discounted cash flows model, AMD is definitely looking like a sell at the moment. But again, like I said, this model uses a lot of assumptions. It's not fully comprehensive, so it's only one tool that we can use to take into consideration, not a perfect tool that we can use to value a business. The next thing that I'm going to do is I'm going to go through AMD's annual report, their 2020 annual report, and just try to figure out what it is that we're actually investing in, because this is good practice as value investors to figure out exactly down to the micro level what the business is that we're purchasing. So first thing that I'm going to look at is page 6. It just does a quick little summary of their industry. We can see right here they talk about how they're a global semiconductor company. They build chips, specifically CPUs, GPUs, and APUs. CPUs being the brain of the computer, GPUs being responsible for the graphics, and APUs, we can see right here it says consumers increasingly demand computing devices with improved end user experience, system performance, and energy efficiency. An APU is a processing unit that integrates a CPU and a GPU onto one chip, along with, in some cases, other special purpose components. So that's what they do. And then we can see right here, system on chip, basically just fitting their CPU and GPU onto a single chip, and then chipset, basically the exact same thing. So now I'm going to scroll down right here, enterprise, embedded, semi-custom markets. This is something else that AMD does. They provide CPUs, GPUs, and APUs for servers and things of that nature. AMD's chips typically don't go into our iPhones or our smartphones. They typically are seen more in the bigger areas like our PCs, computers, things like that. Now what I'm going to do is continue scrolling down. We can see right here competition in the microprocessor and chipset market. Intel Corporation is one of their biggest competitors in that market, and in competition in the graphics market, one of their biggest competitors is, I believe it's NVIDIA. Yeah, right here, NVIDIA. So NVIDIA, Intel, AMD, they're sort of competing for market share and wallet share in this sector of the economy. Let's keep scrolling down here. We can see their mission, culture, and engagement. They were founded in Silicon Valley in 1969, and their mission is to be a leading edge semiconductor product business and provide a lot of value for customers in that sector. Continue scrolling down here. We can see that these are their risk factors. I always like businesses that are very transparent with their risk factors. It makes me feel better as an investor knowing that I know exactly what I'm getting into and understanding the risks of the business that I'm purchasing. They give a couple of different bullet points here for their economic strategic risks, operational, technology risks, legal, acquisition risks, general risks, capital resource risks, and then they go even further, breaking down each specific bullet point. So I'm not going to go into too much detail with this because in the video it'd be an hour long, but this annual report is public knowledge, so if anyone is interested in this, I'll definitely put this annual report in the description below if anybody wants to go through and read the different risk factors that are facing AMD's growth. The next thing that I want to look at is page 39. We can see right here, this is AMD's stock performance over the last 5 years compared to the S&P 500. They've clearly outperformed the S&P 500 quite a bit, growing to a value of a little over 3,000 from a value of 100 base period in 2015, whereas the S&P 500 has only grown to 199. Next thing that I want to look at is page 46. We can see right here a breakdown of their net revenue. Their total net revenue was 9 billion 763 million. $6 billion of that came from computing and graphics, and $3 billion of that came from enterprise, embedded, and semi-custom. Then I'm going to scroll down right here. We can see their net revenue, cost of sales, gross profit. Net revenue was $9 billion, gross profit $4 billion. Income tax provision was $1 billion. Next thing that I want to look at is page 52. We can see right here, this is the start of their financial statements and supplementary data. This is their income statement. We can see net revenue, gross profit, how much they spent on research and development, which is $1.9 billion. That's a pretty substantial amount of their gross profit. And their net income was $2.4 billion. So pretty decent profit margins. That's about 20 to 25%, just around there. And their earnings per share was $2.10, and then diluted earnings per share was $2.06, taking into account like options and derivatives and things like that. I'm going to scroll down here and take a look at their balance sheets. We can see that their current cash position is decent compared to their total current assets. Their total current assets are $6 billion. Cash position is $1.5 billion. Always want to see that a business has decent levels of cash on their balance sheet to weather future economic downturns or to use as an investment to capitalize on future opportunities when they come and go. Accounts receivable, $2 billion. It could be a decent sign, but typically might not be as good a sign, because accounts receivable is basically it's basically saying that AMD has performed services or sold goods already, but they haven't actually gotten paid for them yet. And so some of these accounts might default on their debts, and some of them will be able to pay them back. But total current assets is usually in reference to assets that are going to be turned into cash within this next year. So we would have to see how much of this $2 billion actually gets converted to cash. We can see their total assets were $8.9 billion at the end of 2020. Total current liabilities $2.4 billion, and total liabilities and stockholders' equity of $8.9 billion. Assets and total stockholders' equity and liabilities are always equal. That's why it's called the balance sheet. Total stockholders' equity is $5.8 billion, up from $2.8 billion at the end of 2019. So it's fairly decent. And last thing we're going to look at right here for their financial statements is their consolidated statement of cash flows. We can see net income at end of 2020 ended at $2.4 billion. Their net cash provided from operating activities was about $1 billion. They spent about $900 million in investments, and they raised about $6 million from financing. We can see that came mostly from short-term borrowings as well as proceeds from sales of common stock. Their cash position at the beginning of the year was $1.4 billion. That's the cash position at the end of 2019, and their cash position increased by $125 million up to $1.595 billion at the end of 2020. Now the next thing that I want to look at is page 63. Which is just a quick little breakdown of their inventories, property, and equipment. It's a little interesting. We can see that of their inventory, they have raw materials to build their chips that equate to $93 million. About $1 billion of that is a work in progress, and about $167 million of that is in finished goods, so that's ready to be sold. Next, I'm going to look at page 78. This is the last page. It's a little interesting. Something that I like about AMD is how diversified they are in terms of where their customers are around the world. We can see that in the United States, their sales equate, of their total sales of $9.7 billion, they've sold about $2.2 billion in the United States, $2.3 billion in China. So they actually sell more in China than the United States, and certainly sell a lot more in foreign markets than they do in the United States. And then we can see right here, this is just a summary of where their property and equipment is located. Most of it is in America, and some of it is spread out in Canada, China, Singapore, and other countries. that's pretty much all I wanted to talk about in regards to AMD. The last thing that I'll touch upon is that the CEO, Lisa Su, one of the main concerns she has with AMD is that because they're in a competitive technological market, technology is changing rapidly, but the problem with CPUs and GPUs and creating chips for computers and computer graphics is that there are very long lead times. So when the business and the engineers decide to manufacture or innovate on a particular chip, they usually go into it with the understanding that that chip isn't going to be completed in the next like 3 to 5 years. So they have very long lead times in this business, and that's something to take into consideration because in technology, things are changing very rapidly. So having long lead times, let's say if somebody decides to innovate today and thought that something would be very valuable a year from now, but it wasn't able to be completed until 5 years from now, a lot can change in that time, and the investments that they make in technological innovations today might end up being useless in the future, because by the time they complete their product that they set out to make today, 5 years from now, maybe there's a new product on the market that was made by Intel or Nvidia that completely outmatches their product and just ends up being a complete waste of money and of an investment. So that's pretty much all I wanted to talk about with AMD. Let me know what you guys think about AMD in the comment section below, if you guys think that it's a good business investment or not. Definitely leave a like on this video. It helps the algorithm and helps this video get recommended to more people across YouTube who are interested in content like this. Subscribe to the channel if you haven't already, and I'll see everyone in the next one.